The supply chain industry is worth approximately $15 trillion globally, and the growth of this figure has been accelerated by the effects of the pandemic on consumer shopping habits. For example, more people and businesses are now using e-commerce and opting for delivery instead of collecting in person to minimize physical contact, and this has added an extra layer to the supply chain and logistical process of many products. But before we get to that, remember that we are now doing monthly crypto giveaways on this channel, and all you have to do to be entered is subscribe. Now, Vechain's business model is to attract customers by providing supply chain-based management services. So the larger the supply chain and logistics industry, the better it is for Vechain. Now, the whole reason that customers are using Vechain is because Vechain can provide data points which allow these organizations to have better insights into how they are managing their supply chains, in terms of time, temperature of products, and ensuring that the products they receive from suppliers are not counterfeits, as well as a range of other ways. These companies then use those data points to adjust their business practices in ways which are cost-saving or quality-improving, in which case the enhanced product quality justifies a higher sale price and therefore more profit. But either way, Vechain's partners are only partners because it's financially beneficial to be Vechain's partner for these businesses. And by the way, that's not a bad thing, and it's no secret that many arrangements only exist in the business world because they're financially beneficial to all parties involved. The notable example, of course, is the example of the average employer and employee. I mean, most of us go to work every day, and the only reason as to why the arrangement is possible is because my employer is paying me for the labor which I provide, and they are in turn earning a profit after they have paid my salary from the revenue produced by my labor. And the reason as to why I decided to share this point was to illustrate the fact that if a business arrangement doesn't work in that either party isn't profiting from the arrangement, then you don't have to conduct a study to know that the venture won't work, because it will be obvious when one party pulls out, because it isn't worth their time to be part of the arrangement. Now, the simple fact that Vechain have landed and crucially maintained a number of prominent partners is enough evidence to convince me that the arrangements between Vechain and their partners are mutually beneficial. In other words, Vechain's services actually work in terms of generating cost savings or quality improvements for partners. And we don't know exactly the extent to which Vechain are creating cost savings and whether the figure is 10 or 50%, but however we do have evidence that the average level of cost saving is enough to make the partnerships viable. And of course the cost saving percentage will vary from business to business and industry to industry. But if we assume a conservative level of cost saving and say that Vechain save partners on average of 5% of their logistical related expenses, then this means that Vechain have the potential to generate for businesses around the world $750 billion annually in the form of cost savings. Now obviously not every business is going to use Vechain. Some will use their own services, others will use the services of Vechain's competitors, and many will use no services of this nature at all. But again, if we use a fairly low figure of 5% and say that 5% of these businesses will use Vechain's services, then that cost saving is now equivalent to approximately $37.5 billion on an annual basis for Vechain's potential partners. So by this logic, Vechain is saving businesses $37 billion annually, and it makes sense for those businesses to pay Vechain in the form of VThor a portion of that $37 billion, so that they can access the information which is driving the cost savings. Naturally, Vechain will not receive the full $37 billion or however much in cost savings, because as a business owner I wouldn't be paying $37 billion to generate the same amount in cost savings, because on balance I'd be no better off than before. But if the market sets a level of, say, roughly half of that $37 billion, then Vechain could expect an annual income of around $20 billion. But remember that this figure is only on an annual basis, and I don't know of any asset that sells for 1 times its annual income level. If I buy a rental apartment for $100,000, I don't expect to earn $100,000 every year from this asset. I'd probably earn around 5% or approximately 1/20th of the asset value per year. Or if I'm looking at a broad stock market tracker like the S&P 500, the price of each unit is about 35 times higher than the annual income. For the sake of simplicity and to err on the side of caution, let's assume a conservative figure of 10 times annual earnings for Vechain. Remember that the stock market is currently priced at around 35 times average earnings and real estate at around 20 times, so an earnings multiplier of 10 times annual income for Vechain is actually fairly conservative. But even at this low figure, the total value of all VET, or the market capitalization, would be roughly $200 billion, giving a unit price of over $3 per VET. But even if we consider the dilution of the circulating supply and instead look at the maximum possible supply, the unit price of VET in this situation would still be above $2. And remember that I have used fairly conservative and low figures in this analysis, and the reality could look even better. However, having said that, VET and Vechain are still fairly infant, and there is a possibility of loss in this investment, which every individual investor must appraise for themselves. Personally, I think that the potential for reward far outstrips the potential for loss, but that's just my opinion. Anyway, thanks for watching, and if you like what you just heard, be sure to subscribe for more.